What is going on, everybody? Paul here, coming at you with the Crypto Coffee update, all the news, events, conferences, and little guinea pigs. This one right here, there she is. She's being a little loud one. She's rustling around, causing trouble. But yeah, so if you hear that, that's what's going on. But yes, as well, simultaneous sip. I know you're here for the coffee, the guinea pigs, and the crypto, of course, helps. I'm kind of down there on the list, but either way, I'm the holder of the coffee, so you got to go through me to get to it. So join me. Perfect. Excellent coordination, guys. Fantastic. Always good to start out the day right with my friends talking about crypto and cool stuff. Let's jump right into the news. So Microsoft is partnering with Nasdaq. I'm sure you've seen it already here on your screen, and they're going to be implementing blockchain technology. Awesome. Oh, excuse me, coffee didn't do me right today. Specifically, it is Nasdaq Incorporated, and their firm working with the Microsoft Azure, the subset of the actual Microsoft Corporation, and they're going to be working together on this implementation. Directly from the Nasdaq Financial Frameworks Senior Vice President and Head of Product Management, he says, quote, "Our capital markets industry is evolving faster than ever with the advent of and advancement of cloud, blockchain, machine learning, among others. Key players in the industry are looking to these technologies to explore how they can become more effective and efficient, but also gain competitive advantage." Excuse me, a bit of a paraphrasing there. I changed one or two words just to drive home the example. But suffice to say, this is very much related to the data silos that exist in today's modern industry. Many companies have proprietary solutions where they store their data just for the sake of expediency and efficiency, since interconnecting systems really weren't that big of a deal until recently. After all, you have more data than ever before, as has been said, and you're having these new technologies come out that allow a homogeneous network to share data while protecting certain aspects of said data, which is a much more innovative, flexible solution and can allow industries to communicate and share relevant information without divulging trade secrets and sacrificing a competitive advantage, as was seen here. It is a fledgling partnership. You can see it's, of course, just announced, still new. These things take time. That's neither here nor there. I think we got all the meat of the matter out of this article. It is from Crypto Globe. Remember, we're taking certain news outlets with a grain of salt ever since that story broke, talking about how some investigative journalist report 2 or 3 crypto coffee updates ago, talking about how some outlets accept money for paid articles. Now, I don't think Microsoft or Nasdaq are going around paying for articles, but it's just something to consider when you're doing your own research. Again, none of this is investment advice, really just your buddy Paul trying to help you out the best I can with the knowledge that's available to us here in the space. So let's shift gears here and talking about these new advanced technological systems and how these technologies are creating these confluences where you're having huge outcrops of value and development, seemingly in fits and starts, just light years of development and just revolutionary overhauls of existing systems. And then you have handful of years, handful of decades even maybe, where there's not that much technological development. So fits and starts all around. I'm using this article here today, The Essential Guide to Organizing an AI versus Human Showdown. Fantastic article. Just great article. Fantastic stuff was explored there. A little kid giving a high five to a nice looking robot. It has some excellent information. What they did is they go in and they have a huge analysis of basically how they set up this human versus AI competition, and there's a lot of technicalities therein, making sure essentially that the competition is well-rounded, but also it drives home a very incestuous point that I hadn't considered before until reading the article, that this AI technology is really a consortium of various computing systems and expert systems seeking to solve a specific problem. And it's built by humans. So realistically, it is an extrapolation of human ingenuity in its own right, meaning it is, in a tertiary kind of way, a human versus human competition. It's just one group of humans is able to use a litany of expert systems working together to solve the problem the best it possibly can, and it highlights human innovation. So basically what I wanted to draw out of this article specifically and really used to highlight how these confluences, as I said, fits and starts, how they happen in fits and starts and just explode in terms of development. This left no doubt as to the superiority of the AI in plowing through legal issue spotting in 26 seconds. It took each lawyer an average of 92 minutes. So 92 minutes, and it doesn't have here, further down I guess it has the conclusion, but it says that lawyers on average got 88%, I believe it was 86 or 88%. You find it here in the article. I'm not going to do it all for you. Do your own research. Good stuff. But suffice to say, it was 86 or 88% correct for the non-disclosure agreements that the lawyer was analyzing. Took them 92 minutes. These are industry professionals with decades of experience in the field. The article goes into that as well. And an AI is able to do it in 26 seconds with a 90, I think it was 4% success rate. So pretty great, honestly, in terms of improvements, and just goes to show that this technology is really maturing in a very, very interesting way. And there's some interesting aspects to it. Again, this is a tertiary way of human versus human competition, and just goes to show human ingenuity and innovation is outcropping in some very exciting ways, guys. Let's see where we're at here. 5 minutes, cool deal. Let's go ahead and keep on going with the Morgan Stanley article. They're saying that crypto is now an institutional investment class. Maybe this is something a lot of you in the space were expecting, or maybe already assumed, given you have Bakkt, you have the Chicago Board of Exchange. They're doing, what are they doing? They're Bitcoin futures back in 2017. Now you have all these institutions coming out of the woodwork trying to utilize, successfully utilizing this exciting new technology in their own supply lines, in their own fields, in their own industries. So it kind of makes sense that large institutional investors would be looking towards these technologies as well as vehicles for financial speculation or financial stability, depending on their preference. And that's exactly seems to be what's happening here. This is a report and an update to a no one's called an old report. It's about a year old, so I guess it could be considered in the space an old report. Bitcoin Decrypted, a brief teach-in and implications. I found the report online, like I said, it's from December 2017. The update is behind a Morgan Stanley basically research whitelist. So if you remember that, you could check out the update to the report. But basically what they said is $7.11 billion currently being stored by hedge funds. So a lot of money that could be considered, how do you phrase this? It's a lot of money that's currently in crypto. A lot of stuff is happening and it's developing really quickly. I think the interesting thing in the article, stablecoin trading, we've already beaten a dead horse a lot on this channel with institutional money coming in, it's growing, it's happening. You haven't seen it reflected in the Bitcoin price, but man, if you've been paying any semblance of attention to the companies that are being launched, guys, there are tons of them. Comgo, Adhara, just to name two off the top of my head. You have Bakkt, which was launched, and many, many more that are either simply flying under the radar of the retail investor just due to the complexity and size required to invest in these projects, or they're keeping them quiet for a reason. So it's definitely happening, but as said, stablecoins are the focus that I wanted to keep an eye on, because the report went on to explain that, quote, USDT took an increasing share of BTC trading volume as cryptocurrency prices started falling. This occurred because many exchanges only trade crypto to crypto and not crypto to fiat. Trading crypto to fiat requires going through the banking sector, which charges a higher fee. Also, as Bitcoin prices fell, so did most all other coins. So if owners wanted to come out of Bitcoin holdings, they needed to go to another asset which was closer in valuation to the US dollar. So this is a very interesting segment, in my opinion, simply due to the fact that you are having large financial institutions recognizing some of the issues and just difficulties associated with getting your money out of cryptocurrency, meaning that they have identified these issues and are looking at existing solutions as potentially applicable for their own ecosystems. Goes to show that the maturity of these sorts of projects may be further along than many people speculate. I'm thinking 2019 may be a big year for crypto. What do you guys think? Let me know below in the comments. And sources down there too, of course. Well, you don't bring the sources, I bring the sources. That's in the description. Either way, just look at all the sources. All right, so let's move on to our other article. I just get the comment section and the description just mixed up semantically. I don't know why. I know the difference. I'm a grown man. I know the difference. All right, 25% of affluent millennials are using crypto, and that this article extrapolates to say distrust of banks remains. I didn't actually dig into the report because just time, honestly, guys. I've been writing all morning with some of my own works and projects I'm working with. So suffice to say, didn't dig into this article, dug into the Morgan Stanley one, or tried to. It's behind a paywall. But the information extrapolated is that millennials who make 50K or who have 50K in investment capital or more are far more likely to prefer crypto and actually utilize that in their daily life when compared to traditional financial institutions. Not most, of course. 74% stated that the blockchain makes the global financial system more secure. So definitely the majority believe that it is going to have a huge impact in their daily finances. But in terms of using or holding crypto assets, it's only 25%. You see that number there. But still, a quarter of millennials, that's, the younger generation. The youngest generation currently is Generation Z. So it goes to show that in 10 to 20 years, this could very well become, as the Morgan Stanley report stated, not just an institutional asset class, but a new form of utilizing money or currency, whichever you prefer, whichever is being utilized depending on the stipulations. We explored the differences between money and currency in the last Crypto Coffee update. If you didn't check that out, I do recommend it. It's very informative. But suffice to say, we're seeing a kind of paradigm shift into how money is functioning in the overall society, in the societies in which we live, and maybe even what money is. So there's some interesting debates surrounding that. Switching gears into the government sector, got a couple government news coming out, all very relevant. Hong Kong, they revealed regulatory framework for crypto exchanges, which is pretty cool. Very similar to Japan. You know, the Japan FSA, their Financial Services Agency, I think is the acronym, but I know it's FSA. Over in Japan, they do a similar thing. Same with the Philippines. Yep, Philippines as well recently whitelisted their exchanges, so congratulations to them. Seems Hong Kong is taking a leaf out of those two nations' books and implementing their own framework. The SFC, the Hong Kong Securities and Future Commissions, made the announcement. They're proposing the framework. Of course, as you guys are probably aware, all this has to go through the riveting and exciting C-SPAN-esque debates between everybody who's involved with this kind of thing. But suffice to say, Hong Kong is one of the financial hubs of the world. So with this region getting their what am I trying to say? Legislation in place as to allow for such activities, it's a very good sign. Moving on, we have the New Zealand government doing the same thing. They're actually helping to fund a cryptocurrency exchange, so money, money, money. One has to wonder how Cryptopia feels about this, a $330,000 grant to the exchange Vimba. So it seems that New Zealand has picked an official government-sanctioned exchange that's going to serve as the experimental grounds for the small island nation of New Zealand. This is a very, very popular growing destination in the global world, global economy. It's a beautiful, beautiful place, and it's frankly pretty sparsely populated. I mean, relative to the rest of the world, and of course neighboring Australia is huge and expansive, a lot of unarable land. New Zealand has a fantastic climate, very arable, very, very fertile, and very forward-thinking, financially minded. Say that, financially minded population from the looks of things. Quote from Vimba, even over the past year in a bearish crypto market, our user base has remained very stable. Again, one has to wonder what Cryptopia thinks. They are an exchange based in New Zealand that has been hit with excuse me, a collection of oh, hey, it mentions them. Yep, there they are. I didn't even notice that first read through. How about that? Yeah, one has to wonder about that, just simply because they've had some hiccups in the past and technical difficulties, so maybe this is New Zealand's way of trying to break into the global crypto scene and say something like, hey guys, we have a nice, stable, sleek new exchange for you. That could be a huge boon for, as I said, a relatively small populated island nation. It could grant a lot of capital. All right, let's go ahead and get into the last article of the day before we shift gears over to the happenings. Korea's top finance regulator says crypto exchanges should face no problems with banks. That is a very bullish move from a top regulator. Korea's had some mixed relationships with crypto. You could say that, right? Anybody who's been through 2017 probably knows that. Not as bad as China with the ban, unban, then ban again sort of deal, but there has been some FUD, you could call it. I hate using that word, but I guess from semantic definition, it is FUD, fear, uncertainty, and doubt, in terms of fake news that ended up being less than accurate coming out of Korea. Korea is a very homogenous nation. They generally move very in unison. That can be seen in discrepancies in price. CoinGecko, I believe, allows you to omit specifically Korean markets, which is fantastic. It might be Livecoin. Either way, there's so many crypto tracking sites nowadays. I know CoinMarketCap had that issue, and I believe they're looking at implementing a omission for Korean markets for that reason, that the discrepancies between the Korean markets and the rest of the global crypto markets actually can cause a discrepancy in average price. So just goes to show Korea is hungry for crypto, and it seems as though that the Korean top financial regulators think that things should be a-okay for the Korean people to continue their crypto buying spree. That's all we have in terms of articles. Not too much going on here today, guys. For November 2nd, Friday, we have something called Cal Hacks Round 5 happening in Berkeley, California. It's just a hackathon. Really exciting stuff if you are a developmentally minded individual and looking to flex your programming skills. For November 3rd, Saturday, another hackathon, the Neo Hackathon, happening in Zurich, Switzerland. So if you're in the beautiful Swiss Alp region, that's something to potentially check out. For November 4th, Sunday, nothing. Couldn't find anything going on. It seems to be a common theme for Sundays in crypto, people taking it easy. But that's really all we have for November 4th, Sunday, and for this Crypto Coffee update. As I said, much love, guys. Thank you so much for watching. Let me know what you think of this content below in the comments. And, of course, I got the links and everything below in the description, helping you guys to do your own research. If you find anything interesting or enlightening, or you just found cool that you want to send over to me, send it over to your buddy Paul. Leave a comment, join the Discord. Always trying to share information. It's great stuff. But But as said, thanks again for watching. Much love. My name is Paul. Talk to you guys next time. We're Cryptide, and remember, the tide is rising. So is government approval of exchanges. Nice.